pipe dream for many Kenyans. With a housing deficit of 2 million units and an annual demand of 250,000 versus a supply of only 50,000 units per year, the picture is clear. And it may seem that most of the housing units target mainly those in the high-end market, with only 2% of formerly constructed houses targeting the lower income segment, which accounts for the largest share of the demand. So what options exist for the millions of Kenyans who desire to own a home? We get into all of that this afternoon. Good afternoon, I'm Yvonne Okwara, and this is Business Now. First, the highlights. Owning a home, what does it really entail? Are you looking for a home? Build or buy, we explore the best options for you. And in our Made in Kenya segment, we highlight RobiSearch, a company providing digital solutions for SMEs. So please do send in all of your questions. Build or buy, what are the options? What does it look like in rural Kenya versus in urban Kenya? If you want to buy, is a mortgage the right way to go? We'll be discussing all of that here. So send in your questions at Citizen TV Kenya, at Yvonne Okwara. The hashtag to use is Business Now. And the man with all the answers to all of your questions this afternoon is already here with us on the show. That is Mr. Johnston Oltetia, who's the CEO of the Kenya Mortgage Refinancing Company, the Kenya Mortgage Refinance Company. Johnston will be answering all of those questions, and we'll take a look at the bond that they recently had up at the Nairobi Securities Exchange, how that is going, what are some of the options that are available for you. So please do make sure that you tune in for that. So please keep your questions coming in. Again, the hashtag is Business Now. That's how we'll be tracking all of your feedback. But first, let's take a look at some of the stories that are making headlines in the world of business this afternoon. Now, on-demand transport platform Bolt has adjusted its fares, citing recent increase in fuel prices. In a statement, the company announced it has revised its fares by 4% following this month's fuel price review by the Energy and Petroleum Regulatory Authority, EPRA. Consequently, the increment represents a rise of 47 cents for each kilometer completed on trip. Minimum fare for Bolt's light category is now at 180 shillings, up from 150 shillings. Samsung Electronics East Africa is banking on technology to boost its product sales. The firm says technological advancement is the key driver to its business globally. Samsung is seeking to strengthen its grip on the Kenyan market as more players join the fray. The firm hosted its inaugural strategic summit here in Nairobi. And finally, mobile phone manufacturer Realme has joined the global league of top-selling high-speed phone makers for the first time in the fourth quarter review. This is according to the latest report by global research firm Counterpoint. A focus on young mobile users, competitive pricing model, a wide 5G portfolio and strong multi-channel strategy have all helped the firm grow over the period under review. All right, we'll definitely have more for you in our news at 9, but you are now up to date at this hour. So let's get into our conversation surrounding home ownership in Kenya. What are the options that are available for you? And indeed, for many who are in business or if you're employed, what sort of options exist? Once again, my guest, Johnston Oltetia, who is the CEO of the Kenya Mortgage Refinance Company. Thank you very much for making time for us. We will get into the bond that was, of course, launched at the NSC last week. But first, Johnston, let's get a feel of the overall housing sector in Kenya. What is it looking like? What are the numbers? Where is the need most? And what does the supply look like?
Thank you, Yvonne. Now, I think setting the context, you realize that we have, I think as indicated earlier, a huge deficit of housing in Kenya. Talking numbers like 2 million. The same deficit is growing by about 250,000 annually, with only about 50 of that coming to the market every year. And you're right, only 2% of that is with the moderate to low income earners.
Yeah.
Now, so you realize that when you look at demand, the demand is actually on the lower side of the market, which is the moderate to low income earners. there's hardly much demand on the upper. Now, when you put that in the context of urbanization in Kenya, the picture even looks a lot more gloomy, because we have an urbanization rate of about 4.2% per annum. Now, when you look at the households that come into the cities every year, 4.2% last year, for example, is about 15 million households are in, that's 30% of the population, is in the cities. Now, that increases by about 500,000 every year. And that creates a huge issue when it comes to housing in the urban areas. Now, when you also look at the mix between urban and rural, you realize that about 78% of households in the urban areas are in rental.
Okay.
Now, the opposite actually happens in the village, because that's where you have about more than 80% of the people own their own homes.
Yeah.
So clearly, when you look at those numbers, you know that housing is in dire need more in the cities than in the rural areas. Now, when you look at the home ownership and where people are exactly in the urban areas, the studies we have show that 60 or at least 60% live in other than decent homes. People talk about
in the urban areas.
In the urban areas,
wow,
they're not very, very decent where those people live, and that creates a problem because the government's intention, I think, what we've been hearing is that we want decent and affordable housing in Kenya. So that paints a picture that there is a lot of demand, and there's work to be done to create enough affordable units for people to have decent housing, especially within the urban areas.
Yeah, and because you mentioned it's not just affordable housing, but decent housing as well, and yet affordable housing has been one of the key pillars of the Big Four agenda. So could we then speak about that overview and how far that has come in terms of actually meeting the needs of these 60% or more of people in urban areas that require not just affordable but decent housing? Absolutely.
And so there is very good recognition that affordable housing is important.
Yeah.
And the fact that government itself pronounced itself that affordable housing is one of the key pillars on its delivery is in itself a very good indication that the government is very serious on delivery of affordable housing. Now, the rest was to crowd in participation of the private sector and everyone else to be able to support that delivery. When you look at the developments within the housing, affordable housing particularly, when it started, you realize that there are two angles to it. One is there's a demand side and there's a supply side of housing. Now, the project was made so that there are drivers of supply and there are drivers of demand. And KMRC is one of those drivers in the demand side. Now, there have certainly been a number of, we've had a number of deliveries that have come in the process, achievements that have come in the process for that, both on the supply and the demand side. Now, you realize that in the recent past, especially on the supply side, there has been a lot of shifts into developing housings that are essentially useful for the people on the lower income market segment. And that's what you've seen in some of the projects that have come to market in the recent past, like the Park Road and the rest, where the demand was far higher than the supply that was there. But you also realize that the government, and I don't speak for government, I just recognize the fact that government has provided some incentives for that kind of developments to come in place. One of the key ones is the fact that if you are corporate developing housing, your income per year tax is halved. It's usually corporate tax is 30%, but you'll only pay 15% if you deliver at least 100 units that year. Now, that's a very good incentive for the supply to be able to help people who are developing housing and that kind of thing. One of the other key things is that because of that need to drive affordable housing, a number of key stakeholders have been brought together. those who are in the supply, which are developers, the banks, and even the departments that are dealing with that, have all come together. All of them are keen to create this development.
But what about the demand side?
Now, on the demand side, KMRC has done a lot. So we have managed to push financing to down market, which is essentially where it was missing. And that essentially creates the liquidity that goes to the financial institution for them to lend to the customers. Now, the most important thing about that is you create long-term funding, which is essentially not been there, at fixed interest rates, which is also something that has not been available in our market for a long time. And that creates affordability. So when you have that kind of affordable long-term funding, people will be now more than ready or potentially qualify to be able to get loans. The other key thing that we have done is that we have brought in institutions that have not been dealing with mortgages, and those are SACCOs. So they have come in, they're part of the KMRC equation, and now they're providing mortgages. And that creates an extension of the mortgage providers in the market. And then we have standardized, we have standardized the mortgage underwriting practices, particularly for the SACCOs. Number one, we help them to develop those products, and then now we have standardized it so that all the SACCOs can essentially issue mortgages, and they're using, in fact, almost the same standard for that kind of development. So that helps a lot because you create efficiency. When you create efficiency, the customer benefits. And that's really what you want to see, that the ultimate customer is the beneficiary.
And that's interesting to hear about the interventions on either side, of the value chain, so demand and supply. So can we get into that a little bit more? Because I know there's lots of people who think mortgage, not for me. It's long term. It's 20 or 25 years. And you said an important thing that, having some of that financing at a fixed rate, because you know what happens with a mortgage. Traditionally, what we have seen, it goes up and down, and therefore, things are a little tough for them. So let's now get practical, because there's lots of Kenyans who are saying, I want to own a home. What does owning a home really entail? What are the key steps that a Kenyan needs to know to make an informed decision? Or perhaps let's even begin with the considerations. I want to own a home. What are some of the key things to consider, first of all?
Very well. Now, as an individual, when you want to own a home, the first thing you want to look at is your circumstances. So can you be able to afford? And when you're looking at affordability, you'll be looking at where can I get a decent home that I qualify for? Because the important thing is qualification. So you look at your income. Essentially, you have to have a stream of income that can be able to, enable you to be able to pay the loan and determine that I can qualify for this kind of home. And now there are a number of opportunities because, houses are now ranging, especially those that are coming in through the government affordable housing, between 1 million, 3 million, and 5 million. So essentially, if you have an income of at least 100,000 or something like that, you can be able to qualify for a home. So that's a priority qualification. The other key thing, of course, ordinarily you want to look at is where do I want to own that home? People have various options. So people look at owning a home in the village, others look at owning a home in town. But the priority in our view is that you need to own a home where you live in most, where you spend more than 60% of your time. That's where you need a home, and that's where you need a decent home. Now, the other key thing then is financing. So where can I get the appropriate financing that can enable me to get this? Now, when you look at that, that's where now mortgage becomes important. Because you can't build a reserve of cash for time. That's why in our view we say cash is a very inefficient way of home ownership. The most efficient, so I'll come back to that, the most efficient one is actually a mortgage. The reason why cash is inefficient is, number one, you need a home now. You don't need a home later. When you're 70, 60 years, you need a home now. Now, when you need a home now, you certainly cannot finance a home with your cash right now. You have to build a reserve of cash over time for you to be able to get sufficient to be able to build a home. Now, that's where it's inefficient. Because how long will you take to start building? And of course, there are all those other demands that come in between that can actually sidetrack you from your reserve building process.
Yeah.
And that even make it further for you to be able to own a home. So using a mortgage or a home loan is a lot more efficient because you get it now. And then you don't have to pay all the cash now. You use a stream of, payments over time that, in fact, if your status or your income changes over time positively, then you even have a lot more income to be able to use for other purposes.
Okay.
And so we encourage people to access a home now as opposed to waiting later.
Right.
Of course, shelter is always required. There's no time when shelter will never be needed, right?
For sure.
So you need to start now, because the other key thing is you consider is your age. As you wait to build a reserve, your age continues to advance, right? And makes it even more difficult for you to be able to get a home. So access using a home loan, and you get your home right away, and you pay over time, slowly, and when your circumstances improve, you can actually pay it all at once.
So using other people's money would be one way to put it, because like you say, if it'll take you 10, 15 years to actually put together the money that you need for a home, and in any case, inflation rates being what they are, what you've budgeted for now will probably cost something totally different, 5, 10 years from today. So that is in the event that, you want to go into buying. What would you say to people who'd say, okay, I don't want to buy a ready-made house, I want to build one? What are some of the considerations to make on that end?
So if you want to build a home, there are two things you need to look at. Number one is where. So it's a lot more practical to build a home in the village. And the reason why it's a lot more practical is because, number one, you may have free land, which is donated to you by your parents or someone else. And that the only other thing you need is the capital to build up that plot that you have. So it's easier that way. Now, it's different if you want to build a home up, in the urban areas, because you have to invest in a plot where you need to build a home. And the beauty about that is that in the recent past, or at least for the longest time, SACCOs have been playing in that area. SACCOs have been providing people personal loans. And most of that personal loans actually go into incremental housing development, which is where you buy a plot, and then you repay that loan, and then you go back and get another one, you put a slab, you start developing. So that's the incremental housing development that is very, very practical in urban areas. And that's one of the build arrangements that you can do. But there is also some, you need to be careful when you're building that way, that you have to be certain on the kind of land that you're investing in. So the dangers, ordinarily, when you're building your home, is that if you've not done proper due diligence, you have a significant risk. The beauty about buying is that a lot more people will do due diligence for you. Not least the financial institution that is giving you the money. And KMRC also does that, actually, because we have conditions under which we can refinance. And the conditions will actually go into the ultimate home borrower who is taking up that loan. And the intention is essentially not just to protect the capital you're giving, but you're actually protecting that ultimate customer. So when you give conditions that, for example, environmental conditions that you need to observe, we call it an ENS. We have an ENS policy that we ensure that you follow, so that you don't buy land in a land reserve. And there are several other exclusions, a road reserve, for example, a forest, a riparian land area, and that kind of thing. That's all the risk you want to remove to ensure that this customer does not lose his home. So there's an extension of protecting you as the borrower. Now, when you're building, it's on you. So it's you to make a decision and check that you have ticked all the boxes to ensure that you're not then going into a danger zone, so that you then lose your money.
And beyond even, the land on which, the housing structure would sit, it would also be, of course, making sure that you have followed all of the county bylaws when it comes to making sure that there's building inspection and that you have people on site who are qualified as well. And that can be tough if you're doing it on your own.
Yes, absolutely. In fact, that's a very good observation, that following up is the issue of standard, quality, becomes a lot less if you're doing it on your own, because you want to cut costs. Naturally, people want to cut costs.
Yeah.
And when you cut costs, you then compromise on the quality of the home that you're building. But in this other approach of buying, a lot of quality enhancements have been checked all through. But in any case, if you also borrow from a financial institution, for example, they will always ensure that quality, because you're borrowing to build, and the financial institution will give you all the service providers, including the quality checkers and everyone else, to ensure that the home you're building meets the quality standards.
We're about to take a break in a moment, but Bwana Johnston, this is a show that speaks to SME owners who might not have regular income. You know, they're not necessarily salaried people who on the 5th of every month, X amount of money is coming in. And as you know, with business, some months are good, some months are not so good. What would your advice be to SME owners in terms of home ownership? SMEs, the bulk of Kenya's economy, they employ over 75% of the workforce in Kenya. And so many of those owners are now watching and saying, okay, that's great. Someone can take a mortgage when you've got a steady salary. But what happens to SME owners? What sort of options exist for them?
So there are a number of options that exist for SMEs. And SMEs actually contribute the largest to our economy. Now, the most important thing that we have recognized as KMRC is that SMEs actually have income. The challenge with that income is that the numbers have not been properly put together. Somebody has to put an accounting together for you to be able to determine your income on a regular basis. Now, what we are looking at now at KMRC is developing an assessment criteria. An arrangement where someone can go into an SME, say, for example, a Juakali, who is, developing some things, or even a taxi driver. Yeah. Now, how do you determine the regularity of the income of that taxi driver? So we are currently in the process of we work together with a number of institutions to develop an assessment, model that can help a regular bank to be able to see the income and the qualification of an SME for them to be able to access a home loan. We know that there are a number of, and there is a very good example on what I think Housing Department did the other day with Juakali, guys who are putting together, they're cutting the windows for the houses and things like that. And they actually managed to buy some of the houses in Gara. That means they have an income, and they actually have an income that is sufficient enough to be able to buy them the homes. But for purposes of them being able to access a home loan, because most of the time they don't have the cash, we wanted to have a mechanism where we can assess their income and eligibility for them to be able to afford to buy a loan. That way, we share with the financial institutions that are currently providing loans and tell them, this is the assessment criteria. This is the credit assessment for an SME, and this is what you need to be having for purposes of assessing someone who doesn't have a regular income. And we have some fintech organization that is actually working with us on that kind of arrangement. We have already studied, there is an institution in India that has done that, and which we have had conversations with, and they have been able to do that in India, and we can be able to do that here in Kenya as well.
Okay, great. And that's some good news for those who are in that sector and are saying, how do you determine our credit worthiness? Because the money is there. It just doesn't come the way we are used to. So some interesting solutions there. So keep your questions coming in. The hashtag is Business Now at Citizen TV Kenya, at Yvonne Okwara. We're discussing home ownership. And it's not just for salaried people. It's also for the SME sector. And we're here with the CEO of the Kenya Mortgage Refinance Company. We will be back in a moment with more of your questions and more of our discussion with Mr. Johnston All-Tetteh. This is Business Now. We're back in a moment. And we're we're back. Thank you so much for staying with us here on Business. Now, the discussion is home ownership. To build or to buy, what are some of the key considerations? We've already gotten into that. Do you want to buy, you want to build, you want to borrow, do you want to use your own cash? What does that entail? So we're here with Johnston Oltetia, who's the CEO of the KMRC, which is the Kenya Mortgage Refinance Company. So let's talk about that a little bit, the work that you do and how it relates specifically to ordinary mwananchi. The KMRC lends money to lenders for onward lending to persons like myself who would want home ownership. So tell us about the interaction then and how I as a beneficiary, for instance, or how I would benefit from the bond that was floated just actually a week ago today.
Yes. Thanks, Yvonne. Now, I think in setting that context, KMRC is a wholesale financial institution which is essentially lending to other lenders. And that was also made purposely because we don't have long-term funds, fixed-rate funds in the country, and the intention was to create that liquidity. But the ultimate objective is the ultimate borrower, which is the end user. And that is passing the benefit to the end user. Now, for purposes of accessing KMRC refinancing, a lender will have to, a borrower will have to go to a participating lender. Participating lender here means an institution that ordinarily provides mortgages and is part of the KMRC business. So the way KMRC works is that it's a lender-driven financial institution. It's more like a SACCO. You have to be a member for you to get the benefits at KMRC. And so that's why we have the banks and the SACCOs that are members of KMRC. Now, so to create that link, KMRC lends to the lender, and the lender lends to you, you and me, right? The benefit is what is more important. So we give long-term concessional funding at fixed rate to a lender, and exactly that benefit passes to the borrower, so that you get a loan of 20 years as opposed to one of 8 years. You get a rate of single digits. Single digits is less than 10, as opposed to the ordinary one of 10, 15%, and now looking like it's even going to go up. So that is how the benefit moves. You know, the benefit essentially means you get long-term funding because at the origination level of the loan by the primary mortgage lender and the borrower, you discuss the terms of the KMRC loan, because the terms is already provided to the financial institution. And all the borrowers that have accessed KMRC funding already do that. So a customer comes in and there is a normal bank products and there is one that is backed by KMRC. So the customer will be more keen on the one that is backed by KMRC. And we have had a few. And the terms are very good because it's less than 10%. It is also long-term, and it is at fixed rates as opposed to the floating rates that we currently we have been having. So when you have a KMRC-backed mortgage, you enjoy all the benefits that come with that kind of arrangement.
What's been the uptake of facilities provided through KMRC's facilitation?
The uptake is very good. Actually, we have had some results recently where customers were talking to us and telling us, you know what, it's the best thing that has ever happened to me. I've accessed a KMRC mortgage, which is something I didn't expect, and that kind of thing. So what we have is we have about 7 financial institutions that have already accessed KMRC funding. And we have mortgages of about 800 that have come, I think 1,800 that has been refinanced by us. So that's mortgages we have looked at, we have qualified them, and KMRC is going to refinance those mortgages, some of which already have. We have disbursed more than 2 billion shillings to the primary mortgage lenders, and that is part of the money that they're using to originate more. So we are yet to hit scale, but it's because supply is not as what we expect, because the units that qualify excuse me, are still under development. But for the ones that are currently available, we have already seen a lot of demand from the customers.
Tell me, so I would have to, where can I get information, first of all, on which institutions, are working with KMRC? So can one walk into a bank and say, hi, I would like details on the KMRC
backed mortgage.
Yes.
So we have them in our website, and we have been propagating around. You know, every publicity that KMRC creates will always list the participating institutions, but our website provides all the information, and anyone can access our website to be able to obtain which bank, which SACCO is working with KMRC, and they can then participate on that basis.
Can I get a current mortgage that perhaps was not KMRC backed? But then can I, you know, banks do this all the time. They take up your existing liability, and then they, you know, take that all of that together and then lend you money, sometimes at, you know, a more competitive rate. So what happens to somebody who's borrowed money and is, you know, already repaying it and has just now discovered that there are KMRC-backed loans, and say, okay, I would like to move my loan to a KMRC-backed one. Is that transfer possible?
Yes, that's refinancing.
Yes.
So you can refinance your mortgage.
Yeah.
Now get better terms with a KMRC-backed one. So you just go to the financial institution that gave you the loan,
yeah,
and obtain a KMRC-backed loan, which by refinancing your current existing mortgage. Yeah.
So you recently had a bond. It was oversubscribed to the tune of 400%?
480%.
Yes, that's almost 500%.
Yes.
And then that was now floated at the Nairobi Securities Exchange last week.
Yes.
So tell us about how this will impact, you know, Kenyans and the sort of product offering that is there. And also, you know, for people who might want to actually participate in purchasing KMRC bonds.
Yes. So the benefits are two for anyone. Number one, you can invest in the KMRC bond as a person. If you know, you can put your money there, and it's a, you know, a very good investment for you to invest in that bond. Number two, as a home borrower, you certainly benefit by getting the refinancing. So KMRC raises this money and will lend to the primary mortgage lenders. I know there will be a question about the cost.
Yes.
Maybe we'll come to that.
Yes.
But before
yes.
we go there, you generally people you know, can qualify because the money moves to the primary lender, and then the primary lender will lend to you, and therefore you get suddenly KMRC financing through that. The arrangement, though, is that that funding will come in form of blended finance as opposed to just the bond alone. But the most important thing that creates is it actually enhances the liquidity that we have. So it increases the pool of funds that KMRC has for purposes of increasing even to the customers.
Yeah.
And that means even where we have lower cost funding, you can now be able to get a home that is more than 8 million. You see, we have disaggregated that to the extent that you have affordable and the one that is not very affordable. So even the one that is not very affordable can now be able to be accessed because KMRC has additional funding other than the concessional resources.
Right. You know, at the start of this show, we talked about, you know, the fact that most of the formal, you know, housing units are targeted at the higher income.
Yeah.
And there's a question here from Mwalimu Katebes Kibet. He says, it looks like practical home ownership favors those with income of 100,000 and above. What suits those whose incomes are way below 30,000, considering their other needs? I mean, and if you take a look at it, I believe it's about, what, 79 or close to 80,000 people in this who are of working age are the ones who are earning 100,000 and above. That means the majority earn far less than that.
Yeah.
What sort of options exist for them?
So, you see, that used to be the situation before. It used to favor. But the most important thing now is creating that affordability, both for the units as well as for the financing, because both of them have to be affordable for you to qualify. The units have to be those that anyone, at least someone who has an income of 50,000 or something like that, can qualify, because that's the main criteria. See, you have to qualify for you to be able to even access the funding that you're talking about.
Okay.
But for you to qualify, you also have to look at the cost of the unit that you want to buy. And that is already certainly coming down. We have more decent housing that is currently cheaper. So this thing does not necessarily, at least at the moment, does not necessarily focus on the upper income again. So the arrangement is now the low income. When you look at the affordable housing that we have set, it's 150,000 and below. That's the focus. So below means anything from where you can qualify all the way to 150,000. So if you have 30,000 or you have additional income that can help you to repay that loan, certainly you qualify for that.
Okay, and just before we answer the next question, I'd just like you to clarify, because I'm seeing a couple of them regarding that we can't come to KMRC and say, hi, I want a loan. You lend to lenders who then lend to us.
You
just clarify that again before people start knocking
That's absolutely
down
important.
your door.
You are welcome to come to KMRC and say hi, and we will direct you to the appropriate institution that will give you the loan that we have loaned. So there are institutions we give, the banks and the SACCOs that we give the money, and that is where you go.
Right.
You know, you move to your bank, where you currently are, getting your banking services, or your SACCO, where you currently getting your services.
And you have some SACCOs as well.
And we have a number of SACCOs.
Yes.
We actually have 11 of them.
Okay.
And that's where you start the process.
All right.
So you have a conversation, say, hi, I need a KMRC-backed mortgage, and the conversation starts from there.
Okay. And to be sure, you're lending to these lenders at a concessional rate.
Absolutely.
Which they're then supposed to pass on that benefit to me,
yes,
as the consumer.
Just for avoidance of doubt, at the moment we are lending at 5% to the banks and to the SACCOs. And this we are talking about long-term funds of 20 to 25 years. And when it comes to you and me, we will be seeking exactly the same 20-25-year money and a rate, because of course when you lend at 5, a financial institution, a bank or a SACCO will have to put up a margin for their operating costs. So, but the margins they're putting at the moment is lower than 10%. So they put a margin of about 4%, and they're selling the loans at 9%.
Okay, so at least it's not double digits.
It's not double digits.
Because mortgages can be punishing.
Yes.
For 20 years, it can be quite something.
Yeah.
So, and I'm glad that we've put that clear, so that we understand that. We have a minute to answer this question and wrap up. Daniel Mugai says, let's say I have a loan with a bank, unsecured, deducted from my employer. Can I get a mortgage as a refinance?
Yes, in fact, very fast. The arrangement is just to quickly go into that bank and say, you know what, I want to borrow for a loan for a home purpose. And of course, the rest is for you to identify the property and the rest. And you can convert your loan into a home loan instead of a normal.
I see.
Yeah.
Okay, good. So at least that's answered. We're out of time, but I just want to give you the last minute or two to then wrap up, where we are with housing, why it's important, some things to remember. Just recap a lot of what we have talked about, some of the key things to remember when it comes to home ownership. You said something interesting about owning a home where you live 60% of the time, rather than perhaps in the village, and maybe you might need one now as opposed to when you're in your 70s. Just wrap this up for us.
Thank you. So I think one of the key things that we would advise people is that you need a home now as opposed to needing a home later. So take the first step now. The most important thing is your qualification for that. That is your finances, your ability to pay. The other thing, you always need to consider your age, that you don't want to wait to take a home loan. So of course, you want to take it now so that you build it over time. Now, buy a home where you are most of your time. So it is where you live at least 60% of your time. That's where you need to buy a home. And so home ownership, in our view, affordable housing is a terrific reality at the moment. And we have rates that have completely come down already, and I think you have seen a few financial institutions demonstrating that effect, that now you have a fixed term mortgage. Now you have a very long-term one, and long-term does not mean that you have to always wait for that term. You'll always repay your loan whenever you are ready to finish, as soon as you can. But the most important thing is now. Go into that now. Your circumstances improve, repay. And maybe now start going into another project because you can be able to do that. But the most important thing is that you have an asset that you can leverage over time. And an asset that you own, which value potentially increases over time.
Absolutely. Thank you very much, Bwana Johnston Oltetia, who's the CEO of the Kenya Mortgage Refinance Company. You heard it from him. Those are your tips, and it's now getting more and more affordable. Now you know what you